Welcome to the Orange Hammer Podcast. My name is Corbett Storick. I've been a licensed general contractor for 8+ years, specializing in new construction, renovation, furniture building. I'm the son of an architect and an interior designer, and I've been surrounded in this industry since birth, watching all aspects from concept, design, build, punch list, and of course, all the problems that come up in between. In my time in Durham, North Carolina, I've noticed a significant gap in knowledge between homeowners who need work and the people who do the work. On this podcast, I hope to break down the process of homeownership from the perspective of both the homeowner and the contractor in an effort to help raise the knowledge of homeowners about their homes and the construction/renovation process. I hope you enjoy. If you're enjoying the Orange Hammer Podcast, or if you have a topic that you want covered, or have recently done a project, please contact the Orange Hammer Podcast. The Orange Hammer Podcast is on Instagram and Facebook. Please like and subscribe, share on whatever platform you're enjoying your podcast on. Also, check out our YouTube channel, The Orange Hammer. The Orange Hammer Podcast is proud to be brought to you by CRS Contracting LLC for all your construction and handyman needs, new buildings to renovations, furniture building, EV charger install, or even a TV mounted. You can call me, Corbett Storick. It'd be my pleasure to help you. You can find me on Instagram at CRS Contracting. WSDG, the Walter Storick Design Group, specialists in architectural and acoustical consulting. Check out WSDG.com. And Taylor Bragg, for all your artistic needs in all mediums. You can find her on Instagram at brag_about_art. That's brag, BRGG, with 2 G's. She's the fantastic artist behind the Orange Hammer logo, and she did my fantastic table painting of my podcasting table. The Orange Hammer Podcast is proud to be brought to you by Stacy Sloan with Keller Williams Elite Realty, proudly serving the Durham and Triangle area for 25 years. Call Stacy at 919-972-1180. The Orange Hammer Podcast is proud to be brought to you by Rachel Z with Rachel Z Real Estate Team Realty. From the Triangle to the Triad, call Rachel Z at 919-323-6068. All right, everybody, another episode of the Orange Hammer Podcast starts right now with my guest, Kyle May. Kyle, how are you doing this morning?
Doing good. How are you, sir?
I'm doing great. I've had a very productive morning of self-care, gym time, all that good jazz. And I guess we got to shout out Rachel Z for even making this happen.
She's magical.
Yeah,
she does some things in the real estate market. I can tell you that much.
Yeah. Well, I mean, let's just jump right into it. So first, let's start off. What do you do?
So I'm a mortgage loan officer with Movement Mortgage. I'm a branch manager. My branch is out of Alamance County, but okay. I come over to Orange County quite often.
Okay. Alamance County, give me some big towns because I'm not super familiar.
So I don't know if anything's big in Alamance County.
Give me some known towns. Yeah.
Mebane is probably one of the fastest growing. Right. So that's probably...
That's Alamance.
22, 25 miles, but some of Mebane actually shares Orange County. So it's right there. It's right next to Eflin, Hillsborough, about 15, 20 minutes away.
So the same single town of Mebane is in 2 counties?
A small portion of it's in Orange County.
So depending on where you live, you've got to go to Mebane's permit office to build a house, or you got to go to Hillsborough to the tiny permit office, but it all says Mebane.
Exactly.
That's
but the majority of it, like I said, is in Alamance County. It's not too much in Orange.
Okay. Are you from that area?
Originally, I'm from Rhode Island.
Okay.
Military, not me personally, family, moved around a little bit, Fort Benning and whatnot, and then we settled here when I was probably about 7 or 8 years old. So I've been in
Fayetteville, I'm assuming, at the base?
We were moving back from Fort Benning and then stopped off here to visit a grandparent and just never left. There's more to the story, but we don't have that long on a podcast.
I mean, we do, for the record. It's our podcast, but we don't have to jump into that. Okay.
But been here since I was like 7 or 8 years old. Stayed in Alamance County, went to college, played football at Guilford College in Greensboro.
Okay.
And then stayed there for a little bit, came back to Alamance County and kind of just made it home.
Nice. What position did you play? Football?
Linebacker and defensive end.
Okay, so you brought the pain.
Well, now I'm in pain, but yes, yes, I tried to bring the pain, and I was a little undersized. I mean, I'm 5'11", but
I was going to say, you don't look as tall as I would think for a linebacker.
Yeah, well, it's D3 football, so D3. We're not D1, you know. So there's a complete different size difference. But you know, 5'11", 230, 240. There's a little weight behind me, but yeah, I'm not playing against Alabama or somebody like that. There's just,
I mean, you got more accolades than me. I didn't even play D3. I played club baseball.
Hey, you know, whatever.
Yeah.
If I could redo it, I probably wouldn't have played in college, even though I started and I played and I had fun. But the injuries and how I feel some days with some of those injuries, high school probably would have been it.
So I'm curious, do you believe the injuries were a result of just like natural wear and tear of playing college football, or do you believe that like because it was a D3 school, there was less attention paid to maybe the off-field stuff like the gym time, the recovery, maybe you didn't have like, you know, enough ice baths for the team or whatever? Do you think there's a correlation there?
I think that's a fair question. With us, obviously there's going to be different training facilities if you're at somewhere like a Duke, Alabama, whatnot, than to go for college. But if you were injured,
there's a money factor here.
Exactly.
There's just no way around it.
My personal opinion is no for me.
Okay.
I think when I had an injury, if I told them I had an injury, that we would do what we needed to do to get that fixed, doctors, PT, whatever it may have been.
But it's on you to bring it up.
And then, but here's a lot of things they don't really talk about with sports, or unless you've been in sports, you don't know is, hey, you earned that starting position. In college, it's a business, baby. So as soon as you are out in a week, somebody's going to fill your position. And if they're good, you're never getting it back.
Yeah.
So a lot of times you're like, no, I'm fine, coach. I'm good. So, you know, there's just a combination. I never had any like concussions, thankfully, because that's the big thing now, right? CTE.
Absolutely. Yeah.
I mean, it's horrible.
Yeah.
But I think I could count on one finger how many concussions I've had in my entire playing time. So I never really dealt with that side. I never broke any bones. Mine was mostly ligament damage. You know, playing on turf fields, it makes you faster. Yes. It makes everything feel better in a way, but everything's instant. There's no sliding. There's no give. That's where you see a lot of knee injuries, foot injuries, and stuff like that.
Didn't Rodgers just go down and he blames the turf?
No, his Achilles.
But he blames the turf.
And you're starting to see a movement that a lot of people are like, we don't want turf anymore. So I was in high school, we obviously had grass, and then in college we got turf my second year. And I mean, yeah, you're fast, and you know, it makes you feel everything's just a good grip. And when you're playing DN or linebacker, you need to be on it, any position really. But turf, I think you're going to start seeing that kind of taken back out, because
at least in the pros, or do you think throughout?
I think it'll probably start in pros, but we'll see. You know how any movement is. You know, hey, the first week or two it seems great, everybody's going to get rid of it, and then they forget about it until the next injury happens, and it builds back up. Yeah. So we'll see, but yeah, my injuries. I mean, nothing severe, but nothing like I'd rather have broke my arm because that heals, right? And after your arm breaks, if it's a clean break, you're good to go.
It's even stronger, is what I've been told.
Supposedly, whatever. At
least like I heard that the bone density can be increased because of all the, like, I guess, white blood cells going there to heal. So like assuming it's clean, like you said, and just like reset and everything's fine, and you don't re-injure it before it's healed. Like hypothetically, it could be.
Mine was all ligament damage, like we were saying earlier, to where sometimes that's only going to get back so strong unless you just are really great at PT.
Right.
So, you know, shoulder surgery, wrist surgery. The thing that really kind of ruined my playing career was turf toe. And growing up, you always hear, you know, turf toe this, turf toe that. I think Deion Sanders, that was one of his big things. And you're like, oh, what a wuss injury. Your toe hurts. You'll be fine. I'll tell you what, when you have turf toe, you're done. You can't do anything. It feels like you might start running a route or doing something, you're perfectly fine. And then you just have that weird little angle you kind of cut on it, and it feels like somebody took a hammer to your foot.
Whoa.
Yeah. And I could just never really get past that. So coming into my senior year, I probably played half the games because I just couldn't get on the field. I just couldn't play like I wanted to. So, yeah, injuries are tough, but yeah.
My only turf experience is I currently am in a town of Durham kickball league.
Yep.
And their field over at CM Herndon Park is turf.
Yep.
But, I am not a fast cutting athlete where it affects me. So I only look at it as the positives of we get to play in a drizzle, whereas if it was grass, it would be mud and the game would be canceled.
Exactly.
So,
I mean, there's pros and cons to anything.
no,
right?
obviously, but it's very different where okay, kick the ball, run straight to first. Like this is very different than a Deion Sanders cutting against a defensive person while he's trying to make Olympic level catches with one hand or whatever, OBJ trying
exactly.
to, with that one armed thing or even an Aaron Rodgers, with me and my personal opinion of Aaron Rodgers, I am curious how much it is just his age. Like,
of course,
you're a professional football player in your upper 30s. That's rare right there. It's aggressive. And, oh, by the way, the entire other team's only job is to try to murder you if you're the quarterback. So, turf might have been a factor, but I don't know if you could just blindly across the board be like, if it wasn't turf, he'd be fine. Like, the Jets would be winning. Like, okay, wait a minute. Let's.
Now, I was excited. I'm a Patriots fan through and through, but I was excited about the Jets this year just because of the team they could have had with A-Rod or, whatnot. I was just like,
This is so weird to hear you say A-Rod. Because as a Yankee fan, I think of Alex Rodriguez. And I was
exactly.
like,
that's
A-Rod.
why I was like, well, hold on. That's just fantasy football, whatever. But, it's combination. He's old. But then, hey, when you're used to playing on grass all those years, practice and whatnot, and then you're practicing on turf, I mean, it is changing certain things. So, it is what it is.
I don't really understand why it's even a discussion. Like, there's no roof. Why don't they have grass?
Yeah.
Like, I get it in, let's say, New Orleans. You've got a dome. But even still, put some grow lights in at night, and you could have real grass. I mean, it's not – greenhouses figured this out. Like, it's not a – there's a way.
Exactly.
There's definitely a way.
Yeah. I think everybody just looked at turf as, I don't want to say a new invention because it's been around forever, but it just makes people's 40s faster. Anything faster, anything quicker is always going to be in the plus category. But, the injuries 100% go up on turf. That's a fact.
Yeah. And I mean, I don't like football, but I'm a baseball junkie, and we have a similar thing where there's like 3 or 4 fields that have turf. The biggest one that comes to mind is Tampa Bay.
Okay.
Because their roof does not open. Like the Rogers Center for the Blue Jays in Toronto, they have a retractable roof. Right. I actually don't know if it's turf or grass because they could just open the roof when they need the sun. But like Tampa, I know for a fact that it is cement and turf. And when I see my Yankees like going for a sliding, diving catch, I'm always just like, oh, God, that's gotta hurt. Like 2 inches of pad and grass, and then it's cement. Like this, you're just you're sliding on a slab.
Turf burn. That's not fun either. And when it's in the summer, so we had little black pellets in our turf.
That's what it's like for Durham for the kickball.
So in our during the summer when it's hot, your damn feet are on fire. Like, goodness gracious. We used to squirt water on our cleats because our feet would just get so hot in there. So
they eliminated sliding. It's like, at least for the kickball,
of course.
They're like, you guys just can't slide. Like if you slide, you're actually out. And we were like, whoa. They're like, no, it's for injuries, but like we will penalize.
And there's no need for it. I mean, let's not be crazy out
this
here,
is beer
guys.
league. This is not.
This is enjoyable time.
Exactly. Yeah. Like,
but sometimes though, when you're an athlete, you get that. It doesn't matter what it's for. Hey, when my daughters sometimes want to like compete against me with something, it takes everything in my heart to let them win sometimes because I'm like, I want to win. I don't care what it is.
Yeah.
So
I feel it. We go out there to have some fun at kickball, and you can't help get pissed when half the team doesn't show up, or we're playing with no third baseman, and we're just getting murdered.
Yep.
And you just, by the 6th inning of just being like, well, you're only winning because we don't have our full team, you get pissed.
Yeah.
And I can't help it, but I don't let it affect my life outside of.
When you're telling me about playing kickball, I could just feel my groin being pulled. I just know it. I'd go in there and try to kick it as hard as I could and pull something. I could guarantee you, without a doubt, that's what would happen.
I mean, we have had one dude, I swear last season, he's good now, but I swear last season every game he would pull something.
Yeah.
Like he'd make some diving outfield catch and then he'd limp off the field and be like, "There's the ACL. I'm done for the game." We're like, "Are you serious, dude?" He's like, "Yep, it's gone. It's gone." I was like, "Bro, don't dive. Let it bounce. It's okay. We actually need you like more than we need you to make the catch. We need you to just be okay, like as a friend."
And I think a lot of times mentally we can still do things, right? And I was talking to a few of my friends the other day that played some sports in college, and they were like, "Man, I tore my Achilles last year." I said, "What the hell were you doing?" And they were like, "Playing flag football." He was like, "Just trying to do too much." He was like, "My mind thinks I could still do it. I know how to do it, but I'm 35. You start getting into your 30s and you don't, and it's not that somebody in your 30s can't play football, can't do things professionally. It's you're not doing the same things you used to do to reactivate your body.
Yeah, you're not training or more importantly, recovering.
Yeah, so you're just out there just quick jerk reactions and pop.
That's how
my
it happens.
That is my I get cold chills when I think about injuries, and it's always the Achilles because just thinking of that thing popping, you could hear it, and then it rolling up in your leg. Oh, man, no. Like, I don't even want to walk out of here.
I'll get the wheelbarrow.
I'm over here rubbing my Achilles right now as we were talking.
I mean, listeners might be like, he's just a wimp who doesn't want to try as hard. For me, that's why I don't lift as heavy as max as I could because I have no spotter. Oh, yeah. And I refuse to do a lift to failure because if I've got to halfway through a lift abandon those dumbbells. First of all, my dumbbells might break because it's like the Bowflex twist the knob and they're only held together by a couple magnets. Yeah. And also I don't have a professional team to help me recover. So if I really go to failure and pop a shoulder or something, now I just don't lift for 6 weeks. And that's going to screw with my head more than getting the best gains or whatever it might be. So, there's mentalities for all that stuff. Yeah.
Oh yeah. It's I get personal. It doesn't matter. But so for a while, I was like, man, my testosterone must be low. My energy levels weren't quite there and just not the same. But I'm like, hey, I've never been older before, right? We don't know what it actually feels like getting older and having kids and working full hour. You know how it goes. So it's just, hey, we don't know life until you live it. So I'm just like, maybe this is normal. Well, I went and got my testosterone checked, and my testosterone level was 240.
I have no frame of reference.
So the average is, and not a medical professional, so don't take any of this. Disclaimer. But I'm pretty sure for my age, it should be somewhere between 400 and 900.
Oh, you're low.
Mine was low.
That's half.
Not even close.
Wait, you said 240, and it should be 4 to 9.
Yeah, and 4 is low, obviously.
Okay.
Or 9. So got
seems like a big range of 500 points.
Well, I guess body weight. They have to give a range, right?
Fair enough.
But for me, I should really be probably at that 700-800 to be a healthy 35-year-old male in what I do for a living. And then basically went to the doctors, got a blood test, all that stuff, ran the numbers, and they gave me what's called Clomid. Clomid is basically, and again, not a medical professional here, but most people get Clomid to help them have children.
Okay.
I don't need any help having children. Don't want any more. I got 2 beautiful daughters. We'll leave it at that. But basically, Clomid's a really safe, natural testosterone booster, per se. And I've been taking it for about 60 days, and mine's at a 930 now.
So obviously, huge difference in the numbers on paper. What's the real noticeable differences for you in real life?
Sleeping better. And it's so hard to pinpoint things because, hey, do you not sleep good because you stay up too late because you're on phone time or you're not eating right, you're not exercising. So there's so many variables, right? But in general purpose, I just don't sleep well. And since I've been on it and my testosterone levels have been going up, I have been sleeping better. My mood has been a lot better. Ooh, so, and there's just things. Your body's full of chemicals, right? A lot of stuff is, if there's imbalances of some sort, it will affect you and you don't even know it. So I've just noticed myself now a lot more relaxed, just stable. And I'm not trying to sound like I'm some psychopath or anything like that, but just stable, just calm, collected. and a little bit more energy levels and stuff like that. So, if anybody's listening to the podcast, and women too, you have to have testosterone and estrogen. Like your levels could be messed up too. So, if you're feeling sluggish and stuff, maybe for no reason, you just go get your hormones checked. And a lot of times they're off, and it's just the food we eat and lack of exercising and stuff like that. And I think it will help you. I'm not saying any specific place to go to or any type of certain medication to take, but Clomid is basically the safest one you could use as a male, and it's worked so far for me.
It's very interesting. Like when you started listing stuff, it's very not what you would think stereotypically until you said like, oh, a little bit more energy levels. But like when you start thinking, when you think of stereotypical testosterone, you do not think of cool, calm, collected.
Roid rages,
baby. You think of like, some muscular dude, taking TRT or whatever it might be.
Exactly.
And I'm not a medical professional. I don't take testosterone. I haven't had my testosterone checked. I don't notice a sluggishness, but I definitely am flooded with social media TRT advertisements.
Yep.
And now I don't deem it necessary, but it definitely might be, something that I don't know, in a year when I get my blood drawn or whatever, be like, hey, you're taking the blood. We might as well check the numbers.
Yeah, and we're not over here, jabbing needles in ourselves. This is just a pill form.
Yeah,
it's just like you have a headache. What do? You
take
same
some
thing.
ibuprofen. Yeah,
if your numbers are off, if something, you just take something to help it. So that's the way I look at it. And again, I'm not over here working out like that anymore. I mean, I'm behind a desk a lot of the time playing dad. Normal adult type stuff. So that's where I think just when people talk about testosterone, they're thinking like you thought, roid rage, big muscular, mean guy.
There's a stereotype.
Yeah. Well, and don't get me wrong, it's out there for a reason, right? But at the same time, most men don't talk about this stuff out loud, and there's nothing wrong with it. Hey, man, if your numbers are low, it's okay. It happens to everybody.
That's true. Yeah,
there's nothing wrong with it.
There's definitely a bigger stigma on the male side of seeking out help for health, especially in the mental health department, which, testosterone may be a pill or an injection, but that could very much be an effect on your mental health. If you're not getting enough sleep, you are not an optimal person. And I say person because gender is irrelevant. If you as a human are not getting enough sleep, there's a very large trickle-down effect into your whole life.
Absolutely.
So prioritizing sleep is really, really hard. I find myself not doing the things I know I should do, like killing the TV and phone 30 minutes before, dimming the lights, all this kind of stuff. I'm on that phone till the second I decide to go to bed, and then I
fall asleep with it in your hand.
I'm actually the dude who needs the TV on, and I do the sleep timer.
Oh yeah,
because it's every night, and I don't make it 5 minutes, but it's on for 30.
I'll pass out instantaneously.
Yeah,
but staying asleep's my biggest issue. Never, because I'm up every 2 hours, wiggling, moving.
That's brutal.
And a lot of it's, again, just physical issues, just injuries, hurting, hips are really tight, had a little hip injury. So, but I'm not doing the right things I'm supposed to do. I'm not stretching every day. I'm not doing certain things. So I'm over here crying about it on a podcast, but at the same time, there are things I could do to make it better.
Yeah. Right? I mean, that's most of us, I feel like. There's definitely...
I'm holding all y'all accountable out there. Be better, okay?
Be better than us. Yeah. I don't even think you need injuries to recommend daily stretching.
Yeah.
You don't have to be an athlete. You don't even have to lift, but it's just good to kind of either wake up and stretch, or I used to stretch before I went to bed.
Yeah, go to a yoga class. I'm telling you, I've done it everyone. I wouldn't say hot yoga, because some of those hot yoga classes now, it's hot. It's really hot and it's rough.
That's a different animal.
Oh, gosh.
You need to be doing yoga a little bit, and then also go test yourself in a sauna before you just sign up for hot yoga.
I've learned that the hard way.
Yeah, I've heard enough people talk about it where I'm like, no. I can't just do that. I've got a foot problem. I can barely balance half the yoga stuff. So this is not the move for me. I sweat a lot in my 70-degree gym in the guest room. There's no way I'm going to a 100-degree yoga class. Yeah.
No.
Okay, but circling back in, one Mortgage lender. So how do you get into that?
So basically, I was always in the restaurant business. Have you ever heard of Nantucket Bar and Grill?
Yes, I have.
I've worked with them. My family's worked with them, and I don't want to say we're related, but we've the family and us have known each other for 30, 40 years. So I used to work when I fresh got out of high school. I took a leap year. I took off a year because I was a screw up, didn't know what I wanted to do with my life yet, right? So I used that as an excuse of, hey, I don't want to go to college yet. So I actually moved to Carborough and worked at the Kangaroo Express gas station.
Okay.
And I was just like, man, this can't be all life has to offer. I need to just do something a little bit more. And my mother at the time was a general manager there. So I started serving tables and all that stuff. And then I stayed on there throughout college, come home on the summers and work and whatnot. And then after college, I ended up serving and managing the one in Raleigh.
Okay.
I've worked at the Raleigh, Durham, Chapel Hill, every single location. Great restaurant, good food. Nice little shout out for you guys over there. But
we're sending them bill for that shout out.
Yeah, for sure. Yeah, get a good Cajun filet.
I better get a certificate.
Cajun ribeye. Yeah,
I better get a free meal out of that.
It's good stuff. So
but Nantucket Grill located at
yeah, so that's kind of where it went. And then I found out I had my first child on the way, and I said, okay, server restaurant hours for me wasn't going to allow me to be a good single parent. Mm-hmm. So I needed to find something else. So I started looking for other jobs and started working at Wells Fargo as a personal banker. Okay. No, I did not open up any fake checking accounts like all that happened in 2018. But don't
even know what you're talking about. So
well, they get in some hot water because there were some people doing some shisty things, mostly on the West Coast, and it was a big lawsuit. Long story short,
so personal banker, is that like
checking accounts,
the teller behind the thing, or like the dude in the office who wants to open a business account? Okay,
dude in the office. Hey, you want to open up a personal account? You want direct deposits? Hey, are you interested in a credit product, personal loan product, and so on? Right?
How do you just walk into that job without like being a teller first or having a finance degree or whatever? I've never looked into employment at a bank.
Great question. I think because I had a degree, had nothing. I had a business minor and a criminal justice major.
That's
bachelor's.
Yeah,
so it's just having a piece of paper. I had no clue about banking. But and I don't think this is fair, and this is a whole other question. Most people probably would have to start off as a teller or something, but I didn't due to having a degree. But still not a high-paying job as a personal banker. I mean, you're probably making, at that time, this was 10, 12 years ago, $35,000 to $50,000.
Wow, I would have really thought it would have been more.
No.
But I have no frame of reference.
There's different levels. So, like, if you're an investment banker or a private banker, you're probably making 70, 80, 90, something like that. But
so if you like, I mean, obviously you don't know, but let's speculate wildly.
Yeah.
If you manage a Bank of America,
yep,
are you breaking 100K?
Maybe.
Okay.
Maybe. Depends on how long you've been there, but a lot of those big banks really don't pay that great. A lot of people, what you see, and this is just personal experiences, hey, I wanted to get my licensing so I could sell investments or talk about investments, and hey, you have to hit this goal and hit that goal and that goal and that goal, and it was like, man, I'm just chasing a tail, like I can't get there. So eventually, I was just like, man, there has to be other ways to make money and whatnot.
It seems to me that the easiest way to prevent fraud would be to pay people who work at banks good wages.
Yeah, livable wages. And that's the biggest thing.
I don't understand. Right? Like, to me, it's like, wait a minute. That would be like a dude driving an armored truck who's in debt.
Yeah.
Like, wait a minute.
You're setting that up.
Let's not let him drive trucks, or let's give him a rate. Like it's like a dentist with bad teeth. It's like, wait a minminute. There's one thing you should have. It's great teeth or a good wage or whatever.
Don't get me wrong. There's nothing wrong with making 30, 20, 50. It's your lifestyle, right?
No, I am definitely not throwing smoke on anybody making any amount of money. Exactly. I'm just personally thinking about, like, okay, if I'm a bank teller and I make $30,000 a year, that is not enough incentive for me to start not noticing where the cameras are.
Yeah.
Whereas if I was making $65K a year, I'd be like, I don't need to think about that.
Or the risk, hey, all the time people would come in with some really good fake money, and if that passed up and you miss it as a teller, you're probably getting in trouble. You get in trouble once or twice, you're done. So there was risk, or hey, I'm opening up an account or closing an account, and there's some weird shady stuff going on, elder abuse type stuff. The position was definitely unique to where a lot of it, don't get me wrong, I'm just looking at the clock like, oh my God, let me get out of here. But there's sometimes there's gut wrenching. Somebody's coming in there and they're trying to get a personal loan because they can't afford their medicine or food. And they want to get a personal loan from me so they could make do over the next few months. But if they're in that position, more than likely their credit's horrible.
Right, you can't.
And I couldn't get them approved. Now I'm over here sitting here like, this is crazy. So eventually, fast forward, as a personal banker, you partner with other referral partners, your mortgage, your investments, your insurance, whatever it may be, credit processing. And our mortgage consultant that was always in the building, I would send her referrals. And I was just like, man, she comes in at 10, she leaves at 2, she drives a nice car, she seems pretty relaxed. I said, I need that life. That just looks good, right? Well, that's a lie, guys.
False advertising.
False. But I was like, I want to get involved in this. I've always had that corny, hey, white house, picket fence, family dream of buying a house that's always been instilled in me since I was a child of everybody wants home ownership, right? And I got hired. And when I did, they really stopped hiring unless you had past experience, right? So I got in there at the nick of time back in 2015, when I started to be able to be hired with no experience as a mortgage loan officer, mortgage broker, whatever you want to call it.
And who was that with?
That was with Wells.
Okay.
So basically started there, and my first day I was supposed to be a junior loan officer underneath somebody else. They quit.
So all of a sudden you're the guy.
So all of a sudden I'm the guy, and I know nothing.
No.
Nothing. They send us to training to
teach
teach us.
The big league center fielder went down, and you got called up. Let's go.
Yeah, with never playing baseball before.
Yeah.
So
they threw in the ball boy.
Yeah, exactly. So exactly. Hairball boy, go in there and see what you could do. But so basically, the first year in that business, man, I don't want to say it was a struggle because financially I was still doing better than when I was a personal banker. But what's an FHA loan? No clue. And people are calling me as a professional, and I'm over here like, I don't know. So everything took me so much longer, and I hate not knowing an answer, and I hate not black and white answers. If you give me some gray answer of that should work, or maybe this, or maybe that, it drives me insane because maybe is how you get screwed. Maybe
we have a similar personality in that, and I've actually been like, really working on myself aggressively to accept more gray area answers, because it has been an issue, like not in business as much, but like in relationships with like my mother, my father, my brother. Sometimes sometimes there is no clear yes or no. We have to give you a maybe, and it'll drive me up a wall. And I've really over the last couple of years been like, okay, accept the maybe, pencil it in anyway, right? Parentheses maybe, and just check back in.
And you get a little bit better with that. It's just maybes in the mortgage industry.
Well, that can lead to bigger like mistakes for people's lives.
The loan won't go through. They just lost $10,000 in due diligence, and all I could say is sorry.
And they didn't get the house. Yeah.
And they lose all that money.
Yeah.
Thankfully, and I'll pat myself on the back and my team on the back, I haven't lost a mortgage in 6 years.
That's fantastic. I don't know like
the
if
percentages,
that's the norm or what. Yeah.
I don't know the actual percentages, but I know I rescue loans from other lenders on a monthly basis.
And by rescue, you mean like they tried
screwed
to get
something up. They did something up with income, something they overlooked, and now they're coming to me, the client, because we have nowhere else to go. Can you fix this? I heard you fix things. Well, some people aren't fixable. You should have never been pre-approved. What were you doing? But my thing is, if they credit qualify, their credit scores are good enough to approve for a loan, and they income or debt to income qualify, their debts versus income makes sense, then we could get loans approved. Or, hey, maybe the other lender just wasn't being as creative. Like, yeah, you are, how the loan is currently structured, screwed. But instead of putting down 20%, why don't you put down 10% and pay off that car that's $700 a month, and now your ratios are back in line? Some people just don't see other avenues. Or, hey, your dad said he would co-sign. We need more income. Oh, didn't think about that. So that's where most lenders have the same rules, right? They follow Fannie Mae, Freddie Mac, Ginnie Mae, and whatnot. All these, the people that make the rules,
Government
yeah,
regs.
exactly, yeah. So most companies follow the same rules. Some have some overlays, which are extra rules on top of the rules. But so we should all be kind of playing in the same sandbox for the most part. And just some people just don't look at things a certain way. And hey, on my own loans, I've had one or two to where I'm like, we're done. I just don't know what to do. I'm looking at it. And then I have my wife, fiance, who does the same job that I do with my company. And she's like, did you think about this? And I'm like, oh, that's why I married you. There you are. So, it's.
So breaking down a few of those, what's a good like minimum credit score that you would like to see? What's actually a better way to phrase it? What's the lowest that you would really think you could get it done?
So again, this is disclosure that every scenario is different.
Oh,
every
of course.
person's different.
Yeah.
Every credit score, even if it's the same number, is different.
Yeah, but let's just talk,
580
averages.
credit score is what FHA will allow in most scenarios.
I really thought it was going to be higher. That seems very low.
And most people say that. And don't get me wrong. Trying to get a 580 credit score approved is not easy.
For sure.
But it's doable.
Possible. It's possible.
100% I've done them.
Okay.
And sometimes you think of 580, that person doesn't pay any bills. No, maybe it's a younger borrower or older borrower, and they just had limited credit, and they missed one credit card payment, and they only have one credit card, and it was 8 months ago, and it's never happened before. That's going to brutalize their score. Yeah. Now, if they had 4 credit cards and auto loan, and they miss one, it's not going to hurt you the same way. So FHA is typically the lowest as a 580 credit score. It's
also very strict. Like, I am not a credit expert. I'm probably the furthest from it. But I do know that, like, what mistake you make, it will cost you way more than what it takes to fix it. It takes, like, infinitely more time.
Mm-hmm. And typically 2 years when you see things
change,
not hurting you as much. But I'm not a credit counselor, but I can look at majority of people's credit and say, you do this, this, and this, within 3 months, your credit score should go up this amount. Yeah. So after doing it so long, it's just kind of second nature. And then other clients, I just straight up say, hey, listen, you're up a path, and I need to refer you to a credit counselor. And realistically, I think you probably have a 2-year time frame.
Right.
And then some people, and I always try to, keep them pepped up a little bit. Like, hey, who cares if it's 5 years from now? How much is interest on a rental property? Or how much, if you rent, how much is the interest? 100%. Because you don't own it. So if it's 5 years now, 3 years from now, the whole dream here is to buy that house, because I think if you look up what the top 10 richest people and how they started making money, it was in real estate.
Yeah.
I mean, it's there. The numbers are there.
It's there. Yeah, I've heard that before. I've had a few guests on who have even told me that, like, they got into either real estate or investing, or real estate investing, a combo, because of some wealthy, famous person who put out a book or a podcast or something. They're like, oh, I listened to this guy's info, and he bought his first mini mall in 1964, and I'm like, oh,
well,
awesome,
good for him, right?
Yeah, good for him. Yeah, I mean, I'm in the game. My family and I have 10 Durham rental properties.
Yeah,
we bought single family homes that all needed to be gutted because they were as condemned as you could get them without the sticker that says condemned.
Yep.
And they all needed foundations jacked up and new roofs and all that.
Oh, yeah.
And
complete
gut, complete redo. It would have been easier to light it on fire and start over,
rebuild,
and build from the ground up. But for some reason, we were like, let's keep the
charm,
and the exterior walls happen to be okay, and all 9 out of 10 of them we kept the siding. It was all good.
Yeah,
and they're all the nicest house on the block by a significant margin.
Yep,
and rents go up every year. They're all rented. They're all on auto pay rent.
Yep.
And every tenant's super happy because they get a brand new house with my cell phone number if something breaks. And, 10 years down the line, we'll sell them all at an amazing profit.
Exactly.
But like...
And on small scale, because not everybody has the smarts or the assets or whatever to kind of jump into something like your family did. And it was over time, I'm sure, right?
Yeah, we did like one a year, but also like... my partners are my family, and they're both my parents are both in their 70s, and have a wildly successful real company that they built and worked at for 50 years. So they had the capital to buy these houses and put in the money down for the reno. So we didn't even need a loan.
Yep.
So if we're being frank, I am not a good success story for you to follow. No, let's be brutally honest.
Yeah.
Like my success story, yes, I literally sweated and bled in every one of those houses. I put in all the kitchen cabinets. It's not like I didn't work,
Of
you know,
course.
but let's be very, very
But without
clear.
the parents, that wouldn't be there.
If I didn't have extremely successful parents who are like, we view this as a good investment where we're all going to partner up, we're going to start an LLC. This LLC is going to manage these properties and buy these homes, and this is going to be a long-term investment for our family.
Yep.
All of that is very smart, but let's be clear. I did not start from the bottom with $500 in my pocket and go get a loan and rehab a house and then sell it and take the profit and buy the next one and this, that, and the third. But like, could it have been done? Yes.
Yep.
But, you know, I can't sit here and be like, everybody should just do what I did. It was so easy.
And, you know, to try to shrink that down is I bought my first house in 2014, 3-bedroom, 2-bath ranch, half an acre with a fenced-in yard, fully remodeled.
That's this.
1,500 square foot.
That's this.
Nice house. Bought it for $87,500.
That's nothing. Well, today.
But think, everybody, like my biggest thing now is, oh, the houses are so expensive. Well, do you think they're going to somehow magically not appreciate? Even back in 2008, 2009, when things were the worst, they were still appreciating in value. You know, so it's just like
because they don't make more land. It doesn't.
Yeah,
can't make
everything's
more-
limited to a degree, right? So I sold that house last year for $220,000. I did nothing. I probably only paid down the principal balance $15,000, but because it appreciated, and obviously I sold in a good time, high, you know, COVID and whatnot, and prices are crazy, and prices are still just as high now, but I made $35,000 a year when I bought my first house for $87,500. Different situation, I get it, than it is today. But 7 short years later, I made over nearly $150,000.
That's
life changing for
Yeah.
a majority of people.
Yeah, and a lot of people don't. A lot of people hear that story and don't think they can do it.
Buying
and
a
you
house
totally can. You just have to realize that there is a level of means that is different from what you want to reality.
Well, let's play a quick little back and forth here. I'm going to pre-approve you on live, okay?
Yeah, let's
now,
do it.
Don't tell me your actual numbers, you know, or any of that. But what do you do for a living?
I'm a general contractor.
How long you been doing it?
10 plus years.
Schedule C, S corp,
LLC.
Okay, got it. And are you netting a profit every year?
Yeah.
You taking losses or profits?
Profit.
Perfect, awesome. What do you think your credit score is?
Honestly, last time I checked, it was like 806.
Okay.
So I'm high up there. Yeah. But I'm one of those dudes with like credit cards all on auto, mortgage on auto, like all this stuff that would help my credit. I keep it all on auto.
Yeah. So let's just say you have job history, right? Self-employed, which
right now I do, yeah.
Yeah, self-employed with any lenders are going to say, okay, in my back of my head, I want 2 year tax returns because what you think you make and what's actually on that piece of paper might be two different things.
Yeah.
But I know you have work history. Your credit score sounds good. My next questions are, what are some of your monthly debt obligations? Ignore the mortgage right now. We're going to act like this is a first-time home buyer. Do you have any auto loans?
I don't, but let's play a game. I have, let's assume I have a car payment.
Yeah, $350 a month.
Yeah,
right?
I have a car payment, a truck payment, and a mortgage. Yeah.
Yep. So do you have any personal loans, student loans, credit cards? Most
people have a student loan, so let's say yes.
So basically, then I will take their gross income and take my phone out real quick. So I'll take, let's just say somebody is making
$60,000 a year,
$60,000 a year,
and they have,
I'm dividing that by 12. That's $5,000 a month gross. Okay, that's what we use gross before taxes. If we use after taxes, nobody would qualify. So let's times that by 45%. What 45% is you're kind of getting high there with the debt to income ratio, but it's still doable. So right now, if you had 0 debts in your name and you made $60,000 a year, you could afford a mortgage payment of $2,250 a month.
That's a huge mortgage
on
payment.
paper. Now, I am the type of person to where I would say, I'm not saying do this because this is max and you have more bills that show up on your credit.
Cut it in half.
Yeah, or, hey, tell me what some of your monthly debt obligations like we just did. Let's just say they said $700 worth. We minus $700 from that, and now you could afford around $1,500. But usually before I get into the payments, I say, hey, what are you comfortable with?
Right.
As a monthly payment.
Because that doesn't include groceries and going to the movie and a cell phone bill and,
electricity, water,
gotta live.
everything.
Yeah.
Everything. So,
utilities, internet.
And a lot of times it's one person qualifying and they have a spouse that's just not on the loan that's making money too. So there's some differences. But if you told me, hey, I'm comfortable making a $1,500 payment, I'm going to say, well, the good news is your numbers on paper and what you're comfortable with makes sense. Some people come to me and what they want and what they could afford are so far off. And those are the people that their feelings kind of get hurt because it's like, listen, you know, you just can't afford that.
But the problem is, in a bigger sense of the picture, is not that person couldn't get approved. It's that person didn't know that given their current financial situation, because if you're not a mortgage lender, you have no idea how to navigate this.
It's world. Education.
It's a huge gap in education. That's the reason this podcast exists, and why I have someone like you on here to really kind of we would need 11 hours to explain the ins and outs of mortgage, and it still wouldn't work, and my eyes would gloss
Hell,
over.
I'd probably confuse myself after a while. There's
and
so
listeners still wouldn't get it. But things that we can really drive home for listeners are things like, you know, don't sleep or not pay attention to things that could very easily be affecting you in a seriously long run and large way. For example, your credit. If you've got low credit, yeah, that sucks. But don't just go, It
is what it is.
Like,
fix it.
What are the ways to fix it? You don't necessarily need to throw money at it. You could just simply be like, oh, you know what? Wife, let me take that internet bill. Let's put it in my name on my card.
Yep.
Put it on auto pay. You're going to get a huge amount of points? No. But every point counts. And after 2 years, that could be 40, 50 points.
Yep.
That could be the difference. Like, that's a huge factor.
And the good thing with credit, unless you have like repos and bankruptcy, stuff is fixable and quickly. The biggest issue I see, somebody comes to me, they have 3 credit cards and they're all at 70, 80% utilization. And it's not that they don't have the money to pay it off. They just don't know any better. So it's like, hey, when you let that balance report that you're over 30% utilization, $1,000 credit card, $300 payment, right? Or balance. If you get those balances under 30%, that's going to dramatically help your credit
Or just
score.
pay them off in full every month.
And you know, we're talking in a different world because some people, and I've been there 100%. We don't have the money to pay it off. We're in trouble. Okay, but if you do want to buy a house, let's say 2 years, instead of just taking your money you have saved up right now and paying off that one credit card to zero, no, pay them all off to 30% or less and keep a little balance on all of them so they're all that low. Because if you just pay off one and the other two are still skyrocket, it's not really going to offset. So a lot of times just talking with clients and and I look at their credit profile and I say, hey, pay this down, pay that down. What about this? What's that? That's a derogatory item, something that was a charge off. You never paid and went to collections. You owe $78. Pay that damn thing off.
Yeah.
What are we doing?
They just didn't. They forgot about it.
Yeah, and I mean, or they had no clue it was even on there.
Yeah.
I've been there and done that. Like, well, I don't even know what this is. Oh, it was a medical bill from 2012. Like, how is that even there?
Yeah.
So little things you could do that will just get your credit where it needs to be. But to kind of warp this conversation in a different way, most people's problems are assets. After credit,
assets.
money, down payment, closing cost. You know, there are 100% financing programs out there, aka no down payment, but
0 down payment.
USDA,
Whoa.
for example.
I thought they did like a 3 or 5%. I didn't know they could just do a 0 down
you
payment.
have to, certain qualifications, certain demographic areas.
No, I just didn't even know it was an option.
Oh yeah,
Yeah.
So like USDA, VA, they're both 100% financing, no down payment. That does not mean there's not closing cost between the attorney, the lender, and all that stuff.
Everybody gets their slice.
You still need a few $1,000s, right? Right now, it's a huge program that I'm using is North Carolina Housing Down Payment Assistance.
Okay.
Every lender has their different thing, but most lenders could use North Carolina Housing. You have to be certified through them. And right now, and I won't get into the specifics, but they have a $15,000 down payment assistance, which means, yeah, exactly. So which means, hey, they give you quote unquote $15,000. Now there's some fees attached to it. We won't get into that, but you get $15,000 to use towards down payment and closing costs. If you're buying a house somewhere in that $250,000 range, when it's all said and done, you're not really bringing anything to closing. No money.
You mean because you have that 15?
Exactly.
Right. Because
So
that'll cover the lawyer, the closing costs.
everything, prepaids, everything, and that's a whole nother different podcast trying to get very granular on all the mortgage guru, but in general, hey, Kyle, I have $3,000 saved up. Well, that's not going to be enough for a down payment. Maybe you don't qualify for USDA, or you're not a veteran or whatnot. So most of your down payments need to be 3.5%, 5%, somewhere in that ballpark range. So that's where that down payment assistance, hey, if we do it right and everything's good. I actually had a client that got a check back at closing for $2,400 a few weeks ago.
I mean, that seems good. That seems good that day, but you basically took out a $15,000 loan.
And so here, this is where it gets better. It's a zero interest loan, the $15,000. The only caveat,
how
it's state sponsored. They're trying to get homeowners, right? Or people into home ownership, and I don't know the whole their on their corporate website what they say this is for, but basically, if you sell the house within 15 years, you have to pay back that $15,000. So it's not for people just to flip and just move. These are people that need homes and are going to stay in that home. And there's no demographic area; it could be anywhere. But there's income limits. I think it's $95,000 for most cases. Again, this is not a disclaimer that it depends on how many people's in the house and all in county. But in my area, it's around $95,000, $96,000 at most points. That's a lot of money. So
if you make less than $95,000
mm-hmm.
and you keep the home for 16 years, you just get a free $15,000.
Yep.
With no having to take it back.
Exactly.
No repay, and
Nope.
the fees are small.
Yep. Exactly.
Wow. Okay.
Yeah.
Well, I need to make a little less money when I get a loan from you.
You're not a first-time home buyer.
Shit. No,
Yes.
I'm not. No,
and technically,
I am
a first-time
not.
home
Okay.
buyer means you haven't occupied a primary residence in the last 3 years.
Well, I'm sitting in mine, so it's not going to
Yeah,
work.
you're
Okay.
SOL
Well,
there, my bud.
Yeah. Okay. Do you do anything with somebody wanting to build their home?
Yeah, so that's where it gets a little bit.
Because that's going to be me when my dad's finished drawing my plans.
So 95% of people come to me and say, hey, I want to buy my own land and build my own house. Me too. I want to do that eventually too. I want to get my own land, perfect little setting, exactly how I want it. The problem people run into is most lenders don't do land only.
Yeah, that's why I bought mine outright.
Exactly. So you try to go buy land first, right? Well, most lenders are going to want 25 or 35% as a down payment. Well, right there, most people are like, well, hold on, time out. I was not expecting that right now until the house was kind of done.
Well, also, most people don't realize that, I don't know the percentage, but the majority of land sales are just done in cash. There's not a lot of people getting loans for raw land, because how are you going to pay it back?
Yeah, so that's number one issue, just finding land and trying to figure out down payment and paying for that land. Then there's two different construction loans. There's a construction loan, then there's permanent financing. Your big builders, Windsor Homes, D.R. Horton Homes, they finance their own building.
Yeah, construction loans are pretty simple. Basically, when the house is done and you get your COA, it becomes a mortgage.
Well, that's a permanent financing for us. So
okay.
So you're
I
building
got my terms different.
Yeah, so you're building a house, but the builder's not requiring money from the lender to build that house. That's permanent financing. We're doing a permanent. When everything's done, we'll give you guys the money to pay for the house. If the builder needs money,
right? If you need draws,
that's a construction loan.
Okay, that's what I was thinking of.
Higher fees, higher interest rates typically, and a lot of lenders just really don't mess with it because, hey, the builder said he was going to build this and he didn't build it how I wanted to, and now we're going back and forth, and there's all legal drama, and that's why a lot of lenders kind of got out of that space. We still have a brokered program that I could use through construction. I'm just not a huge fan of construction loans in general because it's not my niche. I could do them, and I have done them, but they're just not my niche of the business. There's nothing wrong with that. Now, permanent financing with big builders and stuff like that, hey, you're building a home, but they're financing their side, and I'm just sitting here with a permanent loan when everything's done. Do those all day long. That's just a normal traditional loan. That's nothing really to get stressed out about. But want to build my own house.
You need a bigger company with the capital to build the house out of pocket, basically.
Yeah, well, a lot of times they get financing. They have their own builder financing side of things.
Oh, okay.
So it just
for
depends.
for me personally, it's like I own the land outright, but I'm gonna need I will not have the funds to build a house in cash and then get a loan back. So I'm gonna need draws.
Yep.
So it's gonna be a construction
unless
loan.
the builder has their own construction. Because
I'm the builder.
Oh,
see, I'm going to build my own house.
Yeah, I didn't even think about that.
Yeah.
That was a dummy.
Yeah. No, it's not a dummy, but
I was completely forgetting
like
about that.
if somebody hired me, then They could either get their own financing, or the one time I did build a new construction home very successfully, they got a construction loan that turned into a mortgage.
Exactly.
And, if it wasn't a friend of mine and he was just using a regular builder, that fictitious builder would have had to pay probably the first 25 grand to get the foundation out of the ground to then get the first draw.
Yep.
But he had that money to
Exactly.
get the foundation out of the ground.
And just remember, you could use, so somebody like you that owns your land, the land has value to it, right?
Yeah.
So you could use that as equity towards down payment, closing costs.
Which I'm
whatnot.
sure I will have to. Yeah. I'm going to use this house as equity, the land as equity. Hell, I dug a well, use that as equity. Yeah. Do you want my firstborn child? You can have it.
There you go.
Like,
yeah. Give it back to me when they're 18, right? Yeah. So.
I'm not going to have kids, so that'll just be a scam. Yeah. I had my insurance guy text me actually this morning, and he was like, because he's working with me on something unrelated to life insurance, but out of nowhere, he just texted me like, hey, do you have life insurance? And I just wrote back, not married, no kids, not going to have kids, don't need, LOL.
Yeah.
We'll see if he wrote back after this podcast. I was like, I don't need life insurance. For who? For what?
Yeah.
To give to my dog?
If there's an insurance agent, I'm sure there's somebody out there that could try to sell you to, hey, when you pass away, do you want to put your debts to your loved ones? If you have insurance, it could pay for it, blah, blah, blah. So there's always a sales avenue, right?
They're not going to win for me.
Yeah,
It doesn't make sense. Like, there are people that make sense. I'm not those people.
Yeah, exactly.
Like, my brother very much has and needs life insurance.
Yep.
His wife is a full-time stay-at-home mom with 3 kids.
Yeah.
She's working harder than he is.
Mm-hmm.
He's got life insurance.
Yep.
3 small children, all under 6, and a wife
Makes
that doesn't.
sense, right?
It makes
Yeah.
perfect sense.
Yeah.
Like, if he didn't, I'd be shocked. But me, no kids, 1 dog, a girlfriend, no debts. It doesn't make any sense.
Yeah, no. I got you. Yeah.
Yeah.
I mean, I personally have a little bit death benefits for the kids.
Well, you
and
have
whatnot.
kids.
Yeah, exactly. Exactly.
I'm sorry. If you have kids, you need life insurance.
Yeah.
To me, that's the line.
Yep.
Or honestly, if you get married, that's the
Yeah,
line, because you want to take care of your spouse.
Yep. I agree.
Which are gender irrelevant. Like, I think married is a good point where you should really consider it.
Mm-hmm.
Kids, you're borderline irresponsible if you have children without life insurance, in this guy's opinion, which is just this guy's opinion. You weigh it accordingly.
Yep. Yeah, as a term as a whole, there's so many different things that go into it.
Yeah, there's so many things. But I remember when I was like 23 and this person was really trying to sell me hard. And I was like, for who? For what? Like, I don't even have a house yet. Like, what are we talking about?
Mm-hmm.
Like, life insurance for what?
Yeah,
like, I know you
gotta
need
have
a
a
sale,
need.
but like, good for you for having a sales job, but I'm not the client.
Yeah.
Like,
Yeah.
wrong
Hey,
person.
I'm trying to save your time, not wasting it.
Exactly.
So
Yeah.
Let's move on to somebody
there's no
else.
need. Like, when I take the Allstate guy out, when he buys me a coffee, I already know I'm wasting his time for a coffee. But like, we don't need to waste that guy's
Hey, I do
time.
the same thing with my clients. Sometimes I know certain lenders have a better deal than me. Certain credit unions have a better deal. I'm not that guy that's going to just hopefully hope they don't go to them and find out their deal's better. And from the get-go, I lost $1 million this month. Not my money, but $1 million worth of loans this month because, unfortunately, there was a credit union in their scenario that was just whooping my butt. Nothing I could do about it. We have fantastic rates. We have fantastic programs. Not everybody's members at certain credit unions. In this one credit union, and the risk that the borrowers were willing to take on an adjustable rate mortgage, the deal was just completely better mathematically.
Okay, so explain to me, who has no idea, how/why different mortgage companies have the ability, because we're pulling, as you said, same sandbox, to use your quote, and we're all pulling from the same, Fannie, Freddie regulations.
Yep.
So how do you not have the same access to, unless of course it's like they're the VA and you're not working with veterans?
So some of it, I'm not going to lie to you, I mean, I'm really good at doing the loan portion of it. Some of the back office stuff of, hey, how does this broker work with this? Like, we have a program that we actually use Wells Fargo's money to do a bank statement only loan, or a Goldman Sachs investment to do that type of specialized loan product. So there are different companies that have different products that somebody else doesn't have, but there's always strings attached, different guidelines and whatnot. But for example, with the credit union right now, they're huge on adjustable rate mortgage.
When you say credit union, do you mean the state employees
yes,
credit
SECU.
union?
I didn't want to name them
Okay.
because I hate them, but they are.
Dude, it's our podcast. We
Yeah.
can say whatever the hell we
Yeah,
want.
yeah. You know, I think.
But I'm trying to learn myself. Like, I could educate you all day about how to build a deck, but I'm not really versed in this.
So, for example, my biggest competitor probably is State Employees Credit Union. The reason why is they have an adjustable rate mortgage. And again, adjustable rates mean, let's just say it's a 5-year arm. What that means is for the first 5 years, that whatever interest rate they have is fixed. After that 5 years, I think SECU, and I don't work for them, this is just what I think theirs does, is they could change one time, and then they're locked in for another 5 years.
Okay.
So really good damn product, to be honest with you. And their rates are like a 6.25, 6.3 on a 5-year arm, where right now fixed rate mortgages are over 7.
And is this on a 30-year product?
Yeah.
Okay, because I had a 10 over 30.
Yep.
And
so they're all going to be, mostly all going to be over 30 per se,
Yeah.
Or amortization schedule over 30. But yeah, SECU, and they have no PMI. So
Really?
yeah. So the stuff they do is borderline like how,
Yeah.
but they're backed from a different banking charter. So like who backs them is not the same thing as like a mortgage lender or a Wells Fargo. They're on a whole different banking charter, and the stuff they could do over there and the leverage, I don't know how they do it. I would love to see their books because I guarantee you 95% of their business is adjustable rate mortgages, and who the hell wants to be in anything that's adjustable right now on the financing side of things?
Let me ask you a question. This might be very silly. Do you have to have a bank account with whoever you want to go get a loan from?
No, so we're just a mortgage lender. We're not a bank.
No, but for instance, State Employees Credit Union is very much a bank. Like,
so
people go and put their
SECU,
paycheck in there.
They're kind of screwing themselves, and they've got this. They're tightening it up a little bit. Is back in the day, you had to be a state employee to have a bank account. Then they started opening it up to immediate family members, and then it got kind of stretched thin to, hey, if you have the same mailing address as somebody that's a member, you could be a member. So now there's so many people that aren't state employees that have that in with state employees. So if you're not a member there, you can't just go get a mortgage.
Okay.
So and again, I'm probably giving them a great plug on this podcast, shout out to them and what they have to offer if you're a member there, because it's solid. The only thing I try to sell against sometimes is, hey, if you're doing 20% down, you have no PMI with me either, private mortgage insurance, and it's a fixed rate, so we don't have to worry about your rate changing at all, ever, unless you want to refinance it. So, and sometimes my fixed rate is better than their fixed rate. We offer adjustable rate mortgages, but ours just are not competitive compared to theirs.
I don't think anybody in their right mind wants an adjustable rate mortgage.
I can make an argument for it. And again, I'm shooting myself in the foot, but I can make an argument. So, hey, rates are at a 23-year high right now. Okay. It is what it is. If you can afford the mortgage payment, who cares what the rate is at the end of the day? Some of it's a tax write-off and all that type of stuff, but it is what it is. If you can afford the payment, get the house. But with adjustable rate mortgage, let's just say it's a $500,000 house, and the difference in payment between mine and theirs is $300-400 a month because of the interest rate. It's locked in for 5 years. What's the risk really? You have 5 years to kind of figure that out. I think it's a calculated risk. I personally wouldn't do it because I don't like any risk. But hey, realistically, rates are probably coming down second quarter of next year. That's what a lot of the experts are looking at. Sometime next year they'll start coming down a little bit. And if rates drop, refi that arm to a fixed rate. So, I'm not an arm guy at all, period. I'll do it if a customer wants it, but I'm not one. But I could see why people would take that risk because, hey, for 5 years, you're locked in. 5 years, who knows what's going to happen over 5 years? But more than likely, as you can see, naturally, there's a wave with the rates and all that stuff. It's going to go up. It's going to go down. When it goes down, refi.
Yeah. I got a 10 over 30 because it was like 3.25%.
Yeah, that's stupid.
Yeah, well, this was
9
years ago. Or
oh,
whatever.
okay.
Yeah. This was a while ago. It wasn't an abnormally low rate. It was just the time. But I believe, I might be off a little bit, but I believe I was in year 7 of the 10.
Mm-hmm.
And my brother, who trades bonds, he was like, yo, you need to think about this now because it's not going to get better.
Yep.
And I was like, okay, I don't know anything about this, but when he tells me to think about stuff in the financial world, I say, yes, sir, and I start thinking about it.
Exactly.
So, for me personally, I don't know if I could have even done any better. I went from a 10 over 30 at 3.25, and then year 7, I refinanced, kept my 3.25 rate, moved into a 15-year fixed.
Yep.
And I think my payment went from $650 to $850.
Yeah.
And I pay $900.
12 years quicker.
So I'm already paying it. Like I have an auto draft for $900 on an $850 loan. So
yep.
I mean, I can't do that math in my head, but the 15-year mortgage will not take 15 years if I'm paying $50 a month
interest
extra.
Savings.
Yeah.
Yeah.
It'll take 12 years or 13 years or whatever.
Yeah. So I think like the biggest thing I always try to just push to people is, again, it's not impossible to buy a house. It's really not that complicated unless you make it complicated. That's my job, is to uncomplicate things. And then sometimes, you just have hard-headed clients that don't want to listen. Hey, I'm self-employed. I make $500,000 a year. I'm sure you do, John, or whoever it may be.
Yeah.
But according to your tax returns and all your write-offs, you make $38,000. But we have programs for people like that. We have bank statement-only loan programs, which, long story short, we take 12 months of their business bank statements, look at their deposits, look at their withdrawals, and do a calculation, and that's what we use for their income. Now, the interest rate's dramatically higher, but we could still get that person in a house. Or, hey, you need to show more money over the next year or two. It's up to the client. And then, first-time home buyers, like we talked about, you don't need a bunch of money saved up. You don't need the best credit score in the world. Some people, they just need a shot, because I don't care what you say. If you live in an apartment, and I might get brutalized with this, but there's no way you feel at home to a degree. Like, I lived in an apartment in college. I get it. Like, you can make it your home, but, like, it's not yours. And when you have your own, I feel like you just take more pride in it, and it just kind of helps you develop as a person and human to just do better things. And I know that I'm stretching that a little bit.
I don't think so. I've actually, a month ago, started researching what psychotherapists I could bring on to discuss the difference in their clients of who rents and who owns a home.
Really?
Because I truly believe that there is a difference.
Yeah.
And even people who rent an apartment versus a home, I think there's a difference when you get out of that apartment setting and get into a single-family home setting. Even if you're still renting, I think, and my opinion is my own and it is weighed accordingly, I think there is a mental uptick in just your quality of life. Even if you had like the same square footage, same layout, even just to be like, I'm in a home.
You're proud of yourself.
Yeah. Like I've got grass, I
could have animals. I could have whatever.
Yeah. Or like you step out the front door and you step on it. And you're like, this is mine right here. This piece of grass. Yes, Willie, it's just my foot. We got the studio dog, Willie Bear.
Sorry, Willie.
Thinking my foot stomp is the UPS guy trying to not bring him treats. The UPS guys are scared of him. Because, well, they don't see him. And they hear, you didn't hear his bark, but he's got a deep one.
Yeah.
And so, like, through the door, when, like, the Amazon guy just throws a package on the front desk and he gives a real bark, I see them on my camera, like, run away. I'm like, this is hysterical. You have no idea how much of a sweetie he is.
Yeah, we do some rescue dog type stuff here or there. And,
we'll bring them in and try to get them what's it called? Fostering.
Yeah,
right?
fostering. Yeah, exactly. Yeah. And we fail a lot of times, which means
you keep
the dog.
That's 100% why I don't do it.
It's tough. We kind of took a break because we kept getting older dogs or sick dogs, and we give them the best life they could for a few months, few weeks, and then they pass. And it doesn't matter how good you do and how happy they are when they're with you. Anything passing away is just tough. So we kind of took a break where we're like, this is just a lot, just the mental anguish. And so now we just have 2. And one's a lady, a little like Chihuahua looking dog. It's a mixed breed. I don't know what technically it is. And then we probably have a Levi. He's probably about 35, 40 pounds. And this dog is he's like a coyote. Fastest dog I've ever seen in my life. But they both bark at any sound that is not just normal. So if I get up to go to the bathroom in the middle of the night and I creak on the floor wrong, they're going crazy, and I'm like, oh my gosh.
I wouldn't be able to handle that.
Yeah.
Willie's very quiet. He barely moves when I get up. Like I wouldn't be able to.
I just try to keep him back in my mind. I will never get broken into without knowing.
Oh, that's for sure.
Never. Hell, half the time they don't even know it. They think I'm an intruder and they're going crazy.
Yeah.
So
I always wonder, like, if someone actually kicked my door at 3 a.m.
Oh, Willie's not doing
what
anything.
he would do.
He's going to go lick him.
I don't know.
He's going to go lick him?
I really don't know. Because, I mean, it's like I'll leave the door open. When I get a text that a friend will be here in 10 minutes, I'll go unlock it so they can just walk in.
Yeah.
And he'll just be like, huh? Oh, I know you. And, like, go lick or whatever. Yeah. But, like, if somebody actually, like, kicked it in a violent manner, like, I just wonder if he would even give a shit. Or he'd be like,
there's a TikTok, and I don't know where the heck it is. And I'm guilty pleasure of TikTok, as I think a lot of people are. But it was showing, like, they were doing tests about what do you think their dogs would do if somebody broke in and started attacking the homeowner. Like 80% of them, the dogs ran away. I was like, man, I would be so upset if my dog see me getting beat up and it was just like, sorry, not my problem, bud.
Yeah. Oh my God. Right.
You better bite him.
Right.
Bite something. I
or
don't
at
know.
least bark enough to wake me up. Yeah. Because like I got the gun next to the bed. I'll deal with it. But just wake my ass up. That's your job. Kick me with that paw right in the face.
Something.
Yeah. So okay, let's kind of conclude with just kind of the general advice you could give to people who are calling you for the first time, especially that first time home buyer, because that's, I feel like, the biggest stress where at least for me as a first time home buyer, I didn't even know what closing costs were until it was too late.
There's so every lender's different. Most applications are done online, but typically I like to have that, like we just did, that very simple quick question on, are these people able to buy now realistically? And if they're not, if they come to me and say, hey, I just had a bankruptcy last year, my credit's a 500, my conversation is going to kind of switch with them a little bit of, hey, tell me a little bit more about your credit. Because what I don't want to do, and a lot of other lenders do, they just pull credit. Well, hey, if that person's credit score is already kind of damaged and realistically they need to work on some things, why are you pulling their credit? It's only
doesn't that hurt the credit?
Exactly.
Yeah.
So each client's different, but first-time home buyers, if you call me, you call whomever, just start the process. Ask all the questions you possibly can. And I know a lot of times they don't know what questions to ask. So if they're talking to a loan officer and they're just not getting anything from them, go find somebody else.
That's the wrong officer.
We're a dime a dozen, guys. Yeah. There's plenty of us out there, and I'm sure there's plenty that do a great job. Again, my number speaks for themselves. I haven't lost a loan in 6 years. That's a lot of loans without losing a single one. If I pre-approve you, you're solid.
And how many of those take that 2 years for them to go fix something and they come back to you?
Small percentage.
Okay. So a lot of the ones that you're like, hey, you got to go deal some
if it's
stuff,
that type of thing, a 2-year thing,
they'll find someone else in that 2 years, or life changes.
Well, my mindset, and I could be so wrong, is if it took you, if you're in that bad of a position, it's going to take you 2 years to get out, unless it was like a medical, something like that, and it's just, or most of the time it's just financial mismanagement. Sometimes they just don't do the things they need to do, and they just get back into doing the same things.
Right.
So a small percentage of those people. The people that are in the year or less window, I would say probably a good 50-60% conversion.
That's good.
But
because they took your advice.
Accountability is with me as well, as I need to follow up with them every quarter, every few months. Hey, how's everything going? Did you pay that down?
Yeah.
But I typically know the people that are going to do it.
You just have a good sense from meeting with them.
Yeah, meeting with them, talking to them, just kind of getting that vibe. And everybody's different. I'm not saying, I'm over sitting here being biased or nothing like that. But like some people, they're, I'm talking to them. They are doing 3 different things in the background. What did you say? Like, hey, are you serious about buying a home or not? Because if you're not, that's fine. But I can tell you what to do to buy one.
Right.
So, again, it's not difficult to buy a house. You just got to talk to somebody that's just going to sit down like we're just doing and just talk about it. It's not difficult. It really isn't. You don't need to know how to do my job to buy a mortgage or to buy a house. You don't need to know what I do.
You just need to call you.
Yeah, call me, and I'll give you the information you need. So, my website's www.kylejmay.com. That will go straight to my website. You could ask for a consultation. You can put in an application, whatever you want to do. But, I'm here to help. I actually enjoy what I do. it's nice when I go to closing and I see these people like so excited, the kids, the adults, 70-year-old woman that's never owned a home before and she bought her first home. That was touching. Like that one actually, like I felt that one because I think she was from California and just always rented. And affordability out there is crazy. She moved here, yada, yada, yada. And she's 70 years old. She was like, should I be getting a mortgage? I said, and this might sound brutal, I said, when are you going to die? I said, I don't know. Exactly. How do you know you're not going to be around 30 more years, 20 more years? What?
People be living to 100 these days. It's not even crazy.
Who cares how old you are?
No.
It's not like the houses are depreciating to where they're not worth as much. Yes, things could always happen and crazy. Who knows? Right? Nobody knows what happens tomorrow.
Yeah.
But the likelihood and historical, houses appreciate every year, so you should never really be in the hole. And there's not typically any over 100% financing, which means they're already upside down in that house. So that's woman,
rare.
Yeah, so that woman, we got her a nice little townhome in Burlington, and she had tears in her eyes. She was like, I just never thought this was possible. And she was one of those North Carolina housing loans because she didn't have a lot of money saved up.
Nice.
And her mortgage ended up being about what she was paying for rent, and it was just nice. I mean, don't get me wrong. Some of it, I was like, man, I just hope she's okay because she doesn't have neighbors anymore per se. But since she's in a townhome, they're pretty close. It's pretty much like an apartment. But yeah, those little things are. I have one right now, 19 years old, buying his first house, has a baby on the way. And
he's gonna kill it. This is the way to start. At
5-6 years from now,
yeah.
I can't wait to see where he's at.
Exactly. I mean, for me personally, I mean, my mortgage, when I first got this house, my mortgage was like $629 a month. And that was half the rent I was paying for a 2-bed, 2-bath apartment.
Now, these times are a little bit different. Yeah, the affordability factors and stuff is all over the place. I'm not sugarcoating that it's not harder to buy a house now than it was in the years past. It is. It 100% is, just because of the plain numbers of, hey, a mortgage payment on a what house is how much? Like, holy moly.
But it is not impossible.
It's not impossible at all. And then you just have to get in there, get your foot in the door.
Yeah.
And then you could always upsize, downsize, refinance. Rates aren't going to stay the same.
Yeah.
That payment could go lower, higher. But right now, you're paying rent. You're paying the man. You're paying the man,
and if
you're not getting anything from it.
And if you do all of the conversations with you, and you get to the point where the mortgage payment is the same as your rent, that's still a win.
Even
you
if
now
it's
are
more,
building equity.
Even if it's more, we could have compared what you want. Hey, Kyle, I don't want to be in an apartment anymore. I want a place to grow. I want a place to have kids or have my dogs play outside. Sometimes that's a premium.
Of course, to all of that, but I'm talking strictly if you're just comparing numbers on a whiteboard.
Yeah.
If it's $1,500 for the mortgage and it's $1,500 for your rent, guess what rent doesn't do? Build any equity.
Yeah, and some arguments I see is, well, hey, I don't want to have to worry about repairs and all that type of stuff, and I get that. Some people,
not everyone's
in their
a general
lifestyle
contractor.
should maybe stay in an apartment. That's just the lifestyle they want, and I get it. But most people don't want that.
Yeah.
I enjoy mowing my damn lawn.
Yeah.
That's where I go out there, and my lawn should probably only take an hour to do, and I'm out there for about 3. It's just my relaxing factor.
I enjoy paying my landscaping guy to mow it for
horrible.
me.
You're horrible. I'm judging you. What's wrong with you?
You can judge me if you want.
You could mow your front yard in 6 minutes.
Yeah, probably less. Yeah. I used to have a big old riding mower. I used to do it myself. And then I hired this dude to start doing my rentals and my parents, and the discount price he gave me for 7 properties all on the same day. I was like, I can't beat that.
Every once in a while, my lawnmower isn't like working correctly. I have my neighbor's guy come over and do it. And it is nice. And I'm like, I didn't have to do anything. But sometimes for me, my stress is my job. It's like I need to get outside. I need to kind of disassociate. You, for example, are outside a lot and do that type of stuff, I'm guessing. So me, I'm locked inside 24/7. I'm screaming to go outside.
Different lives, slightly different
absolutely.
lives. I want to ask you about one more thing.
Yeah.
The statement, the bubble's gonna pop, right? I think for the most part, that's an agreeable statement, but I and some others believe that when the bubble pops in America, it will not pop in the Raleigh-Durham area because of the insane current growth as well as the insane projected growth with new I believe it's Amazon and Google or Apple are coming here. Well, whoever's coming here, people are coming, and those plans are in motion, and it seems that when small town Oklahoma might pop. It's not going to happen here. Curious your thoughts on that as the mortgage person.
So what bubble?
I mean, that's also a good question.
Because there's so many different bubbles.
That's true.
Real estate market bubble, banking bubble.
Was
there's
more
investment
talking
bubbles.
was more talking real estate bubble.
So,
But
okay,
I guess they're very
that's
related.
Perfect. Yeah, that's perfect. So 2008, why 2008 happened? Because of bad lending practices. People were able to get 100% financing with no job or just stated income. How much money you make? $1 million a year. Cool, great. Sign here. What were they thinking?
Right.
All
Insane.
on adjustable rate mortgages, like subprime. I wasn't around. I was just graduating high school in 2008. In college, whatnot, right there at it. But like looking back at it now, I was like, holy moly. Like how did everybody allow this to happen? How nobody's seen this coming from a mile away. So now, so that happened because of bad lending practices and too much inventory. Okay.
Now we have the opposite. We
have
super
zero
tight,
inventory.
We have no inventory and super tight practices.
Yeah.
Well,
For
tighter.
the most part.
Tighter.
A lot tighter. I mean,
Let's
don't
go
get me
with
wrong.
tighter.
Most
Yeah.
people, even the tight ones, they could afford their mortgage payment. But if they do stupid things and spend too much money like anybody else, they're not. But, we're not allowing stated income. Like, there's still math to our acceptances. It's not just, let's hope it works out. Let's see what happens.
I mean, you should have seen the hoops I had to get through to buy this house because I was 2 years out of college and all the work I had done since I got out of college was cash under the table. Ooh. So I had nothing. Yeah. So I had to get a full 100% cosign from my parents.
Oh, yeah. Basically, they got the loan for you at the end of the day. Your name's on it.
Yeah.
But
our name's on it.
We used all their income.
100%. And what was even crazier was like my parents' very big, successful company in 7 different countries.
Yep.
They still needed 8 years of tax returns.
So that was crazy.
And I was like, guys, they could in cash buy this house 7 times. Are you really like?
Yeah. And and we get customers.
What's going on?
We get clients like that all the time, and I get it. But then sometimes it's just education. This is why we need it. Because blah blah. Now 8 years, I never even heard of that. That's crazy.
Maybe it was 6.
Should have been 2.
It was more than 2 because I specifically remember that, and
Yeah.
I was like, "This seems nuts that you guys need all this." And when I refied, they're off it. Now it's all on me.
Yeah,
blah blah blah. I needed no money from them. Like I could handle the down payment and the monthly payments. It was just like this kid's got no work history. He's got no tax returns with enough income.
Yeah. Why would they give you a loan, right? Because
Right.
you
Why would
haven't
they give me a loan?
proved that
It
you
doesn't
can
make any
make
sense.
payments.
Yeah, it doesn't make any sense.
But yeah, so the whole bubble thing. Again, we have so much. What's going to what are we expecting to blow? I mean, rates are already as high as they can. Prices are already.
I think people are
high.
expecting rates to go drastically lower, and I don't think people realize that in the history of rates,
this is an average.
Not only is this an average, but it should be higher if you look at the standard projected growth of rates over the last 30 years or something like that.
I think the average interest rate over the last 30 years is like a 7.8%. So we're sitting still slightly below average of the last 30 years. It's just people don't want to hear 30 years ago.
Months ago, it was 3, so everyone's freaking out.
Exactly. So and they shouldn't have lowered the rates like they did when they did. There was no need for it. They didn't have to lower them to a 1% and 2%. There was no need for that in the economy. People were still buying. You could have kept rates at a stable 4 or 5%, and it would have stabilized.
Yeah.
But you went so low, everybody refied, everybody cashed out, everybody purchased. And now people do want to buy a new home 3 years later, but they're looking at the payment differential because of the interest rate, and they're like, oh, we're going to stay here until the rates drop.
Let's also mention again, there is zero inventory.
That's not going to be a bubble. So, okay, let's just say a recession happens, and what the feds want technically to cool inflation, right? So let's say a recession happens, depression, hopefully none of that, but let's just say that happens. What happens? Rates will go down, and now everybody's going to get back on the market selling their house because they could buy another house.
But there's no inventory.
But there will be when rates drop because the same people that are holding off selling because rates are too high right now are going to list their house for sale.
Yeah, but that person who sells their house needs to buy a house.
Yeah.
So if there's no inventory.
It works. Like, hey, if you sold your house and I buy your house, I'm probably selling my house.
Well, okay. Well, yeah, I guess we're switching houses. So technically we both bought and sold. But
and then investment people, if rates drop, it's only going to get crazier. Right now, they're trying to stranglehold everybody and slow it down, and it's working.
By they, you mean like the
Fed.
Feds?
Yeah, the
okay.
Fed.
Okay.
Yeah, I mean, don't get me wrong. I'm all for a fair interest rate, and I personally think a healthy interest rate is somewhere in 5s. I think that's healthy. 2-3% is not a healthy interest rate when it comes to stabilization.
That's cheap money.
You know, hey, it's good.
Money.
Don't get me wrong. I get it. I
it's good as a
capitalize.
consumer. Yeah,
Yeah.
I refied for sure.
This is why we're in this problem now.
Right.
2% to 7.5%. Like, holy
in
goodness
such a short
gracious.
amount of time.
Yeah, I mean, it's, you know, on a normal day, mortgage-backed securities, MBSs, whatever, you know, on a normal day, they would go up 10 basis points, down 10 basis points. You don't really need to know what basis points are, but just about that much. During COVID, in the last 2 years, they could go up 70, down 70, up 40, down 40. That's a crazy
It's just
differential.
so volatile.
Oh, my goodness.
Yeah.
And that's the tough part for somebody like me is, hey, should I lock in this interest rate, Kyle? Your guess is as good as mine.
Right. You have to straight up.
As
throw
soon as
your
I
hands up
say,
and go, I don't know.
let's float, let's not lock in and see what happens, market's going to take a shit, and now interest rates went up 0.5%
Right.
overnight.
And you look like the bad guy.
Exactly.
Right,
So
right,
a lot
right.
of times I just, hey, this is what I'm seeing.
And that's
you have to make
and
the
that
decision.
and that combines full circle back to a lack of education.
Yep.
Because if people understood what you just said, which like I think I understood what you just said, but I'm definitely still at probably 70% comprehension.
Hey, man,
that's
I could've-
not your fault.
This
No lender's fault. That's the Fed.
I tried, and I don't know if you looked at my Facebook, but I tried to do a lot of stuff myself around the house just because, hey, I'm a man. Let me see if I could do it right. And I tried to cut crown molding.
Dude, I'm a professional carpenter. I don't do crown molding.
When I say I burned through probably 40 foot of crown molding before I
Stop.
got it up there enough for it to.
You could caulk the seams and say I'm good.
Well, a lot of people don't get is the corners. You know, you're supposed to cut it at 45 degrees, right? So 90 degree on a corner. Typically, is most corners should be 90 degrees if we're just being fair. I know, but you watch any YouTube videos, that's what you're supposed to cut it, right? But what they don't tell you is that corner is actually like 82, 94. So when you cut in 90-degree angles and you match them up, they're so far off.
No.
Man, when I say I was having mental breakdowns in my garage 2 weeks ago, I was like, I don't get it. You have to flip it upside down and then reverse, but if it's a left corner, it has to go to the right. I'm just like, man, I feel so incompetent and ridiculous that I can't do this for my daughter's room.
if you were gonna put crown molding on that wall,
Yeah.
and that wall and that wall, okay, what you actually do
Yep.
is you just put that wall first,
Yep.
tight with no 45 degrees,
Yeah, do you cut
tight there to tight there, and then this piece goes in and you cope that.
And I looked at cope and I was like, man, I don't need that. Even seems worse to me.
But not everyone even has a coping saw. It's
Exactly.
a very, very strange saw that when I was using it as a kid, I didn't know what it was for. And as an adult, I'm like, oh, we
That's
had
what
6
it
of
is.
those,
Yeah.
and we never did crown molding. They were just in the shop. I get it now.
Yeah, I have every tool imaginable, and I don't know what half of them are, but I just try to do everything myself. But long story short, with the crown molding is I got it up, and I found this one guy on YouTube that just made sense and probably did a more little jacky way of doing it and putting it up. But I was like, all right, there's no backwards and upside downs and reverse. I was like, here we go. And it's up there. And once I paint it, unless you do it for a living, you won't notice that there might be a few extra cuts there.
It's all right. Just
that
get
I
in there with
seemed
a caulk gun.
that- well, some of them it was a lot of cock, but you
That's
know
okay.
we got there. So back and forth. Hey, I don't know how to do your job. You don't know how to do mine, but we know enough that you know if we need it, we could ask somebody. You know, someone that specializes, and that's the same thing with mortgages. Is just start. I don't care who it is. Just start.
Get
the
some
process.
education. Start talking. If you don't start, you can never finish.
I've
And
learned
that's
from my
across the board.
clients sometimes. I've had a client, and I don't want this to go on forever. I could talk all day. It was a VA loan.
Okay.
I've always known, or thought I knew, that only veterans could be on the loan, or a spouse could be on the loan with the veteran.
No, kids.
Huh?
You can do kid of a veteran.
Potential, yes.
Yeah.
But I didn't know that you could actually have a non-married person on it, but you have to put down, I think, 12.5% down.
With them.
Yes.
Oh,
and that
okay.
12.5% down has to come from the person that's not the veteran. So there's a way to do it.
So
but
just like if I have a friend who's in the Navy and he's willing to put down 12% with me, even if
you would be really the person putting down the 12%.
Right, but I'm saying like the next day I could give him a check for that 12%. Like so he didn't actually have to pay anything. But like on paper he did. I could get a VA
Now you both
loan.
are living in the home, obviously, right?
Oh no, okay. I'm in this scenario he's not.
No. You both have to be in the
live.
room. Yeah,
Oh,
yeah.
okay.
It has to be a primary.
Okay.
But 99% of the time I was like, no, you can't do that. It has to be your spouse or it has to be another veteran. Well, I was wrong.
Yeah.
And I thought I was 100% right. I've been doing this for over a decade. And the good news is, like, I have no problem saying things I was wrong at, but I've never ran across that scenario ever in a decade. So it's not like I was telling people horrible stuff the whole time. Most people get VA loans because they need the 100% financing, not because they have an extra 12 or 13% sitting around to put down.
Right, and that's a very weird example where it would be like roommates, not even a couple,
straight.
or not even a married people, just like two, which like you could do that. I'm not, none of you and I are not judging anybody.
Yeah,
but like,
I don't care.
That is a separate risk to just like with a platonic friend start thinking about buying a house together. Like, okay, what if he doesn't want to pay next month or something? Like, there's just a lot going on there.
So she told me about it, the client, and I was like, man, I thought I was right. Let me look it up. I called the VA hotline basically, and they were like, well, actually, you can, and this is how. And if I don't know an answer, I go to multiple people to get an answer. I don't go to one person, because that one person could be wrong even if they're confident. So I go to 2, 3, 4 different people to see. And every person I went to on the mortgage side of things was like, no, they can't. You have to be a veteran or a spouse. And I'm like, man, me too. I thought that. But I'm Googling stuff. I'm looking online, and it seems like there's a possibility. Maybe it's straight through the VA. I don't know. She was right. And I was like, ma'am, I apologize. You're 100% right. Even though this isn't going to work for you because you don't have that money to put down, but you were right, I was wrong. So that's the one thing I love about this business is we're always learning. Yeah. And that's where if you're not learning in this business, you're going to get left behind.
Well, our businesses are similar in that aspect because, Fannie, Freddie, whoever, the Fed keeps changing or adding rules, just like the building code keeps changing and materials keep changing and building practices keep changing. And if you don't keep up with the modern stuff, we do not build houses the same way 100 years ago for good reason. Well, I can argue for bad reason, but that's a different conversation. But okay. Well, before we close it out, give your website again for anybody who might need your help.
Mortgage advice. www.kylejmay.com, or just give me a call. Send me a text message 336-686-8272. I am only licensed in North Carolina right now. I just don't have a lot of opportunities elsewhere. But if you do have another state you want to purchase in, I could still do the upfront stuff and refer you out to somebody that's licensed in that area.
Nice. And you're primarily Alamance County, but you do the whole state.
Anywhere in the state. Yeah, I do a lot of business everywhere else. That's just where I live and kind of grew up. But I figured, basically anywhere.
But
and
we do
clarify for primary, secondary, investment homes. So we do all that type of financing.
And if you can't do it, you'll shoot them to the person who can.
Exactly.
Yeah, it's one team, one dream. You're trying to get people in homes.
Love it. Yeah. Love it.
And as always, please like and subscribe. The Orange Hammer podcast is on Spotify, YouTube, Instagram, Facebook, all that good jazz. If you need CRS contracting or want to just contact me about coming on the podcast, call me on my cell, 845-489-6057, or email me Corb, C-O-R-B, at WSDG.com. Kyle, thanks so much for coming.
Thanks for having me.
Bye, everybody. The Orange Hammer podcast is proud to be brought to you by Rachel Z with Rachel Z Real Estate Team Realty. From the triangle to the triad, call Rachel Z at 919-323-6068.